Welcome back to Lunar Beaches Crypto. We ride the waves of the crypto market all the way to the moon. Thank you all for joining me for this next part in the video series. Today, in this video, I always say today for some reason. In this video, we're going to go over Fibonacci and the correct way to use it, in my opinion, based on my experience. So, stick around if that's something that you like, you want to hear about. So anyway, Fibonacci gets a bad reputation sometimes because most traders use it wrong. So because they treat it like, I don't know, like a crystal ball or a standalone strategy or a guarantee, and that's not what Fibonacci is for. Fibonacci is just a measurement tool, so it's measuring a move within a range. For instance, we've got a high and a low. This is going to be a range that I'm going to pull a fib on. So it's important to know how to pull your fibs, okay? So this goes back to market structure. So finding swing highs and swing lows. So just on this chart, our swing high and swing low, I'm just going to place, this isn't going to be at a swing low, but swing high to swing low. Okay. So this is going to be our range. This is our range for this move, okay? So then we take our Fibonacci tool, we place it at the high, place it at the low. Make sure you have your magnet turned on because you want it to be exact. And then from there, we look for retracements or pullbacks. So the key levels to watch, in my opinion, are going to be the 0.5, the 0.618, and the 0.65. Some people use 0.66. I don't think it really matters. It's literally just one little percentage of a percentage. So 0.65 and the 786. So oftentimes you will get a retrace to one of these three levels, and then you will get a reaction. On the top side, on the expansion for profit taking, I have the 1.272 and the 1.618. So these are going to be your most common levels to see after a breakout, price react to, and potentially stop expanding. So if price was to just continue to climb here and break out, I'm taking profit at the 1.272 and the 1.618. So that is what I look for on that if we get the breakout. Now, if we want to enter on a pullback, we can see price is trading to the upside here. This isn't really the best price action to do this on. But if I'm looking for a pullback entry, I'm looking for a pullback to these levels, either the golden pocket or the 50% retracement, the golden pocket, or the 786. And I want to see what price does when it pulls back to those levels. If I get a bounce, we look for the shift in market structure, like we've gone over in previous videos, and then we enter the trade. Now, for me, if I am putting my fib on this level, I'm not going to look for the breakout on this. Okay? I'm not going to be looking for TP here because I'm more of a scalper in general. So what I'm going to do then is I'm going to take from this swing high, I'm going to go from this swing low. Let's just act like this is a low, this is a low. And then I'm going to set my take. These are going to be my take profits here. Okay? So for me, it's best for pulling on trends. So this was a downwards trend. So we have a clear swing high, clear swing low. That's where I'm going to pull it. Now, if we can zoom out and try to find another example. Let's just see. So from this corrective structure, we'll get into corrective versus impulsive in future videos going over Elliott wave theory. But we get the big move here and we top out right here. Okay, so this is one move right here. So I'm going to put my fib from low to high because I'm looking for a pullback, not for continuation. And we get a pullback to the golden pocket twice. Okay, and then we get a positive reaction off of that. And then from there, we go from this high to this low. And there you go. You get up to the 1.272 and the 1.618. Perfect. Absolutely perfect. So those are the main levels to watch. You can and you will reactions off of other fib levels. So this one got back to the 236, almost got back to the 382. But notice it's kind of, it gets pretty deep past the 236 and doesn't even tap 382. So I don't think those would be good levels to go off of. That's why we want to go off of your market structure. So let's just go ahead and draw up market structure. We got high before this consolidation, low if it wants to act right, high, low. Turn off magnet tool so we can actually do this right. High, low, high. So whenever you draw out your market structure, it's important to place your fib from a low to a high and to look for the pullbacks. Now this one gets to the 382, and then you get the continuation. Remember, it's all about watching the levels and looking for reactions to those levels. Who knows? I mean, we could see, let's see, we got a big move here. Last video, we went over anchored VWAP. So let's just go ahead and put an anchored VWAP on this level and see, look, we bounce right off of that swing level anchor VWAP. We place our fib here, and we get up to the 1.272 and the 1.618 and a little more. So that's why combining everything together is so important, so that you can build confluence. So one of my videos, I'm not sure, the next video, sorry, I'm looking over at my notes. The next video, we will be going over confluence. So, and what that is and what that means, if you don't already know. But before we get out of here, I just want to say or show you guys. So you can see the anchored VWAP right here. It's playing right at this demand zone. And it's also with the fibs, you want to see it. You want to see it react at a level in demand zone, but I'm getting ahead of myself because that's the next video. So be sure to watch the next video as we go over confluence and how that is what matters most in your trading instead of, well, we'll get into it. So that's going to be it for this video, guys. Thank you so much for watching. Mad love. God bless. Like and subscribe. I forgot about that. See you guys in the next video. Peace. Ride the waves. Bye.